What's going on, guys? The Dividend Stock King here with another video. Today, we're talking about the stock market and pretty much investors in general. Which is the best strategy when making riskier investments? Now, the question is hard to answer, but um, the one thing that needs to be done is before you make any investment, and I'm not giving any financial advice in this video. I'm not a financial advisor, so you buy your investments how you see fit. I will see an expert for if you're making a risky investment, I will go see an expert. I will go see the expert in that field and talk to them. Don't listen to me. But if you're making a riskier investment, the first thing you need to do, best strategy is to do your research. To do your research, to do your due diligence before you make any type of investment. Whether it's real estate, whether it's stock market, you have to ask yourself a question. If you're buying a house for $60,000 and it needs a lot of repair, and you want to rent it out, what can you rent this out and makes a profit? Is it a good neighborhood? Is it like crime in the neighborhood? How much money can you rent this for? Um, you know, um, can you cut some costs? You gotta ask yourself these questions before you invest any type of money. Even in real estate, some houses are not a good deal. Some houses need so much work and they ask for so much money. And then even when fix the place up, can you find a renter? Maybe it's in a bad neighborhood? Can you find out a good tenant? Yeah, even finding a tenant is fine, but can you find a good tenant? So you have to weigh your risk. Even the stock market the same way. Sometimes these stocks that pay dividends are dividend traps. They pay a lot of money out in dividends, and that could be risky. And they might cut their dividend. They might suspend it because they're paying so much they can't sustain it. So the main thing that you have to do is your research. Is your research. Now this stock here, ORC, to me is risky. It costs under $5, to me it's risky. And you have to do your research. Have they cut a dividend before? They have. Is it a good business model? Do you see a future with this? Did they? The number one question: did they pay a dividend all of 2020? Starting with March when everything was downhill. Did they pay a dividend as soon as the thing goes up in 2020? Did they pay a dividend? You know, they did pay a dividend, but it's still a risky move. Okay, you gotta look at the chart. You gotta look at the company. If you look at this company, at what point it was almost $10, and then it's been going downhill ever since. It's been going downhill. Even when everything went bad in March, it still rose up and it's going back down some. So to me, it's a risky investment. It's risky, and they have cut of dividends in the past. This is a risky. And what I would do for my personal thing, what I would do is get this stock here to pay me $100 in dividends, and that's it. And just put the drip on this thing, or dividend reinvestment plan, and every month it'll pay me that $100. It'll be reinvested as a stock. I won't put my own capital into it because it's risky. It's really, really risky. They cut dividends in the past. Look at the 5-year chart. It don't look great at all. It don't look great. And the price is down now. And look at the 1-year chart, you know, the past year, since it loads up. Probably was terrible with this. It's still down 18%. Look at the past 3 months. It's just down, down, down. And they cut the dividends before. So, it's up today, but to me, this is a risky investment, and this is what I would do personally with it. I'll get to a point in dividends and just look at dividend reinvestment plan, buy share myself, and take my personal capital, put it somewhere else, and that's what I would do personally. But you have to really ask yourself some serious questions. You have to ask yourself serious questions. Um, you have to ask weigh your pros and cons. Do your research on a company or the real estate you want to invest in, whatever company you want to invest in. You gotta look at all that stuff before you make a decision. Even if you're doing something at home or buying something expensive, it's just worth it. Can I put money aside and let it work for me? So that's what I would do for making a riskier investment is to do your due diligence. Go on YouTube and Google and look at what other people are saying about it. Weigh your pros and cons. Ask yourself these questions. Hey, if this thing goes south, can I get out of it? Um, can I find a renter in this neighborhood? Can I find somebody to rent this house out? Can I find cheaper ways to fix it? You gotta ask yourself all these questions before you make the plunge. And once the pros outweigh the cons, then you have your answer. But that's what I would do with risky investments. I would definitely, and you can take it slow. You don't have to buy 100 shares of Orchard Capital. You could buy a few, 1, 2 shares. It's about $10. You're risking $10. So if you rush a little bit of money, do a little bit of money. Get your toe wet to get yourself a feel for it. You don't invest a ton of money at one time. Try to do a little bit. So that's the end of my video. Please grab the channel. Please like the video, share the video. I'll see you next time.